Hello dear students, this is Financial Management Tutorial 4. I am your teacher Suchiprata Saling. Let's have a recap of our earlier tutorials. In Tutorial 1, you have learned the meaning of business finance, you have learned the need of finance in business firm, you have learned the meaning of financial management. In Tutorial 2, you have learned the importance of financial management and objectives of financial management. In Tutorial 3, you have learned the financial decisions and also learned the influence of financial decision in the business firm. In Tutorial 4, you have learned the various factors affecting financial decisions. Now in this tutorial, you are going to learn the concept of financial planning. You will know how financial planning is different from financial management. You will learn the objectives of financial planning. You will understand the importance of financial planning for a business firm. Now, first we will discuss the concept of financial planning. Now you know planning, it is an act of thinking. So you are thinking in advance. So what to do, when to do, how to do. Now if this planning is applied in financial activities, then it is called financial planning. Financial planning, it is the process of preparing a financial blueprint of an organization's future operations. In other words, the process of estimating the fund requirement of a business and specifying the sources of fund and the timing of requirement of funds is called financial planning. So you have to know the three things. First, the estimation of the fund requirement. So when you say the fund requirement, that may be the fixed capital required in the firm or the working capital required in the firm. Second, specifying the sources of fund. So from which sources you are going to acquire your fund for the business. And the timing of requirement of fund that also need to be focused at. Then only the firm will be able to supply the required fund in time. So fund should be available in the real time of need. Then that is an indication of better planning. Financial planning, it includes determining the objectives, policies, procedures, and programs to deal with financial activities. Now, financial planning, it may be long-term financial planning or it may be short-term financial planning. So when we say long-term financial planning, it is the period of 3 to 5 years. This relates to the long-term growth and investment in the business firm. While short-term planning are those which are covering 1 year or less time. It covers short-term financial plan, which is also called budget. Now let's understand it better. Financial planning usually begins with the preparation of a sales forecast. Suppose a company making a financial plan for the next 5 years. It will start with an estimate of the sales which are likely to happen in the next 5 years. Based on this, the financial statements are prepared keeping in mind the requirement of funds for investment in the fixed capital and working capital. Then, the expected profits during the period are estimated so that an idea can be made of how much of the fund requirement can be made internally. This results in an estimation of the requirement for external funds. Further, the sources from which the requirement for external fund can be made are identified and cash budgets are made incorporating these factors. So you note the words which are kept bold. So how they are proceeding for planning? So they will begin by preparing a sales focus. So sales focus means what amount of sales they are going to make in the coming years. So from the sales focus, they can calculate the expected revenue or the expected profit for the business firm. Now, the profit they are going to generate, how that profit is going to be invested. Okay. Now, whether that profit will be sufficient for investing in fixed capital and working capital, that they will again see, and after that they will see that the required amount of fund, whether it can be generated completely from internal source. That internal source, one example is retained earning, or it may be say that shareholders investment, or whatever the money comes from shareholders, that is internal source. Now the rest amount which is not able to be generated through internal source, that money have to be gained source from external sources. So this is financial planning. Now we will discuss the objectives of financial planning. The main objectives of financial planning are to ensure availability of fund whenever required in the business firm. So as we already discussed, that fund should be made available in the time of need, that is in the real time. Then only the business will perform smoothly. Then to see that the firm does not raise fund unnecessarily. This is another objective of financial planning. That means there should not be excess of fund in the organization. If there is excess of fund, that means they are not able to utilize properly. So the fund will remain idle in the business, and that will be a wastage of resources. Then some other objectives also you can add, like to maintain liquidity in the firm so that they do not make any defaults in payments. So these are the objectives of financial planning. Now coming to importance of financial planning. Number one, financial planning helps in focusing the fund requirement in future and be prepared with alternative financial plans to face different situations. So take for example, the firm is expected to grow, or they are having potential for growth is 10%. Now that is a situation. Now consider it as a situation. They are expecting, or they are predicting, that the farm will grow 10% in the next year, but that may not happen. Instead of that, the farm may grow only say 5%, or the farm potential will suddenly rise to 30%. So in this three situations, say 5%, 10% and 30% growth situation, the farm should be ready with alternative financial plan. So if only 5% growth take place, then how they will prepare financially? Or in case of the 10% situation, if the growth potential is 10%, so how they will make the arrangement of finance, how they will invest. So that is another plan. And if the third situation arises, the 30% growth opportunity is there, then how they will arrange the money, or how they will invest. So all this they need to plan in advance. Not only one plan, but they should have multiples of plan, because they are not sure what will happen exactly. So they should be ready with alternative financial plan. And if they're ready with alternative financial plan, that is what we are telling as forecasting. That should be based on calculation. Second, financial planning helps in avoiding business shocks. So when the business firm will face these shocks, when they are not ready, or when they were not expecting that this situation will arise in future. So in that case, they may face this type of business shocks. So they should be ready with some financial plan. Third, financial planning helps in coordinating various business functions. For example, sales and production functions, by providing clear policies and procedures. Financial planning, it helps in reducing waste, duplication of efforts, and gaps in planning. So as we already discussed, Financial planning helps in better utilization of finance and thereby it will reduce wastage in the resources. Fifth, financial planning provides a link between investment decisions and financing decisions on a continuous basis. Well, in the time of investment, there may be a thinking that fund should be available as much possible so that they can make investment whenever any opportunity come. Whereas when they're taking financing decision, they will be in a position like why should we keep uh, we acquire excess of fund, because excess of fund mean again the cost of capital will rise in the business organization and the associated expenses will also rise, and thereby there will be an imbalance in the investment decision and financing decision. Now the balance between this investment decision and financing decision is possible with the help of financial planning because it links the investment decision and financing decision. 6. Financial planning helps in evaluation of actual performance and controlling. So, financial plan, it acts as a base or basis for controlling of financial activities. So, whatever they have said earlier that they will do this. So, again they can look back that they have set the target and whether they are able to achieve it or not. If they are not able to achieve it, why they are not able to achieve it, that those problems can be also identified with the help of financial planning. So these are the importance of financial planning in a business firm. To summarize, financial planning is an important part of overall planning of any business firm. It aims at making funds available in right quantum and in the right time and thus help in smooth operation of the business firm. So with this, we are concluding today's tutorial. Thank you.